Okay. So where did we stop in the last class? Do you remember where did we stop?
And price earnings
Okay, it was price earning ratio, right?
Yes, ma'am.
Okay, fine. So we'll continue with what we have learned last day. The students are still joining. Okay. So last day we stopped in price earning ratio. Today we will deal with the other ratios, okay? Other four ratios, and we'll wind up the overall profitability ratios. So next one is dividend yield ratio, dividend payout ratio, return on total assets ratio, and capital turnover ratio. So I hope you have the equations with you. Okay, so last I told you, please have the equations written in a paper or make a note of it so that you can refer in between. Okay, so yes, we'll start with a question. So let me present my screen. I'm audible, right? You're able to hear me?
Yes, ma'am.
Okay, fine. Okay, so the question is ABC Limited. Okay, don't worry, I'll type the question just a second. ABC Limited had the following earnings last year. Okay, so profit before tax tax rate, proposed dividend, capital of company is 9%, preference shares of rupees 10 lakhs. Okay, you can take the screenshot after the question. Equity shares, 30,000 shares of rupees 100 each, rupees 30 lakhs. Reserve in the beginning of the year, 22 lakhs. So from this, we have to compute 1 EPS, 2 book value per share, 3 price earnings ratio. Price earning ratio. Okay, so these items we have already done. We have already done last day. So don't take much time to complete this. Okay, so first one, EPS. You remember what is the formula for EPS? Net profit available to equity shareholders divided by number of equity shares. Okay, tell me, is net profit available to equity shareholders given in the question? Respond please. Is it given in the question? Is it given? Net profit available to equity shareholders is not given directly in the question. So what information we have?
Net profit before tax.
Okay. We have the information of net profit before tax. So I told you the net profit which is available to equity shareholders will be the profit after interest, tax and dividend. Okay. So I hope you remember that. So, as per our requirement, we have to calculate this net profit available to equity shareholders. Okay, so net profit available to equity shareholders is equal to. So, this is what we have to calculate. Okay, so we have net profit before tax, that is 24.46 lakh. So we'll depict it as 24 lakh 46,000. Okay, so net profit before tax is given. Profit before tax is given. So we have to deduct tax amount first. Tax is 60 percentage. Tax is 60 percentage. So what is the tax amount? 60 percentage of 24 lakh 46,000. What is the amount? 60 percentage of 24 lakh 46,000. That is 14 lakh 67,600. Okay. Then the rest amount will be 9,78,400. Okay. So now we have reached an amount of net profit after tax. The next component that we have to consider is preference dividend. Okay, preference dividend. So preference dividend is 20 percentage of preference dividend is 9 percentage of the preference share capital. So preference share capital in the question is 10 lakh. So what will be the amount? 9 percentage of 10 lakh. It is 90,000. Okay. Now we will arrive at the net profit available to equity shareholders. Will be equal to 8,88,400. Okay, 8,88,400. So net profit available to equity shareholders is done. Divided by number of equity shares. So in the question, we can see that the number of equity shares is 30,000. See, 30,000 shares of rupees 100 each. So now EPS is equal to EPS is equal to 8,88,400 divided by 30,000. Okay, so tell me the answer. Tell me the answer. Somebody tell me the answer.
Rupees 29.61 per share.
29.61 per share. Okay, that's it. That is regarding EPS. Okay, so I hope that's clear to everybody. Since you're not responding, I'm not asking you the question. That's why I'm going without asking questions. Okay, don't think that Miss is going too fast. It's because you're not responding. If you're not telling anything, so why should I wait? So that is EPS. Then second one is, what is the second question? Second question is book value per share. Book value per share. So book value per share we have to calculate. So in order to calculate, so this is a tricky one. In order to calculate book value per share, what all information do we require? Can anybody tell me what all information do we require in order to calculate book value per share? Can somebody tell me?
Equity capital, reserves and surplus.
Yes, equity capital, reserves and surplus. Then one more item from the given question. Can you please look and tell me one more item we need? Equity capital, reserves at
Dividend.
the beginning. Yes, it is proposed dividend. So this is the dividend which is given to the equity shareholders. So the proposed dividend also should be taken into consideration. Very good. Okay, so let's see. Let's see the next page. Okay, so book value per share. Book value per share. Okay, first we have the net profit available to the equity shareholders that we have already calculated, that is 8,88,400. Okay, so now from this profit, what the company did is, from this profit which is available to the equity shareholders, they gave the dividend. They gave the dividend of 30%, sorry, dividend of 20% to the shareholders. Okay, so less proposed dividend 20%. So from this net profit available to the equity shareholders, they were given a proposed dividend of 20%. Okay, so 20% of what? 20% of the equity share capital will be given as the proposed dividend. So we know that there are 30,000 shares of rupees 100 each, and the share capital, equity share capital is 30 lakh. So 20% of 30 lakh will be given as the dividend. Okay, so what is 20% of 30 lakh? 20% of rupees 30 lakh. Okay, so what is the amount? 20% of 30 lakh.
6 lakh.
6 lakh. Lakh. Okay. So now we have the balance of profit. Balance of profit is 2,88,400. Now, as Vishal said, now we have to consider the reserves as well as the equity share capital in order to arrive at the amount available. Okay, so we have reserves. Reserves at the beginning of the year is rupees 22 lakh. Then we have equity share capital of rupees 30 lakh. Finally, we will reach the amount available to the equity shareholders. Okay, amount available to the equity shareholders. So it will be 54 lakh 88,400. 54 lakh 88,400. So now we need to calculate book value per share. So book value per share is equal to amount available of the equity shareholders divided by the number of equity shares. Okay, book value per share is equal to amount available for equity shareholders divided by number of equity shares. Okay, so amount available is 54,80,400 divided by number of equity shares is 30,000. So what will be the book value? What will be the book value? So tell me the answer.
$182.94.
182.94. Okay. So see in the question they have given that 30,000 shares of rupees 100 each. That means the face value was rupees 100. But what is the book value? Book value is 182.94 rupees. Okay. So that is regarding book value, which is the second one. So is that clear?
Yes, ma'am.
Okay, so we are done with 2. Then we have next is price earning ratio. Price earning ratio. Okay, so what is the formula for price earning ratio? Market price per share divided by earnings per share. Market price per share divided by earnings per share. Okay, so one information I forgot to give in the question. Market price is given rupees 200. Current market price is given in the question. Okay, so please add that too in the question. Rupees 200. So PE ratio is equal to MPS divided by EPS. MPS divided by EPS. MPS divided by EPS. MPS is 200. EPS is 29.61, which we have calculated. So what is the PE ratio?
6.75 times.
6.75 times. Okay, good. That is the end of that question. Okay. So is it clear what we have did now? Is that clear? Except for the book value, all the other ratios we have already calculated last day. Okay. So is that clear?
Yes, ma'am.
Yes, ma'am.
What about others?
Yes, ma'am.
Okay. Fine. So let's move to another question where we need to calculate capital turnover ratio. Okay, capital turnover ratio. Calculate capital turnover ratio. So these are the informations given. Equity share capital, 90,000. Preference share capital, 10,000. Reserves and surplus, 5,000. Debentures, 25,000. Current liabilities, 20,000. Fixed assets, 90,000. Debtors, 20,000. Stock, 10,000. Cash, 20,000. Preliminary expenses, 10,000. Okay. So you can take a screenshot of this of the question. So from the whole information, we need to calculate the capital turnover ratio. Capital turnover ratio. Additional information is given. additional information is given. Cost of revenue from operations is equal to 2,40,000. Okay, cost of revenue from operations is equal to 2,40,000. So now tell me, how can we calculate capital turnover ratio? Capital turnover ratio is equal to, what is the equation? Revenue from operations divided by capital employed. Revenue from operations divided by capital employed. Okay. So here in this question, we know that revenue from operations or sales amount is not given. So if in a particular case, revenue from operations are not given for the calculation of capital turnover ratio, please remember that we can consider the cost of revenue from operations also. Okay. So if in any case, revenue from operations are not given in the for the calculation of capital turnover ratio, you can also consider cost of revenue from operations also. Okay, so please keep that in mind. So keeping in mind this point, revenue from operations is not given in the question. So we know that cost of revenue from operations are given 2,40,000. So we'll take 2,40,000 here. Okay. Then now we have to find what is the capital employed of this particular company. So capital employed we can calculate in different manner. Either it can be fixed assets plus net working capital, or it can be equity share capital plus preference share capital plus reserves and surplus plus long-term borrowings, some or less, I mean, deducted by fictitious assets, etc. Okay, so we last year also we learned in case of one of the ratios, we needed to calculate the capital employed. There also we learned that net capital employed means it is share capital plus reserves and surplus plus debentures. Okay, or it can also be fixed asset plus current asset minus current liabilities. In that manner also we can calculate. So can you tell me what is the capital employed? You can use any equation. Can you tell me what is the capital employed in this case? Capital employed. Capital employed. What is the capital employed? Equity share capital plus preference share capital plus reserves and surplus plus debentures. If we have any debentures minus any fictitious assets. So in this case, we have a fictitious asset, which is preliminary expense. So we need to deduct preliminary expenses. Okay. So equity we have 90,000. Preference we have 10,000. Reserves we have 5,000. Debentures we have 25,000. Minus preliminary expenses we have 10,000. So capital employed will be 1,20,000. 1,20,000. So we'll come back is equal to 2 times. 2 times. Okay. So revenue from operations or cost of revenue from operations divided by capital employed is 1,20,000 comes to 2 times. That will be the capital turnover ratio for this company. So is it clear? Is it clear?
Yes,
We
ma'am.
want to multiply it by 100 now.
Sorry.
We want to multiply that 2 into 100 now. Could
Okay,
you please?
if you multiply it also no problem. Okay, no issues. But you can also depict this in the form of times. No issues.
Okay.
Since
Okay.
it is turnover. Okay, when we come to this debtors turnover, creditors turnover, inventory turnover also, there also we mostly depict in the form of times. This much times, 5 times, 2 times like that.
Okay.
Okay. So is it clear to everybody? Is it clear? Please respond.
Yes, ma'am.
Shall we move to another question? Shall we go for another question?
Yes, ma'am.
Okay. Okay, so I'll dictate the question. Okay, so there are some issues when I copy paste a question. Okay, so write down the question. You have you have net income of rupees 5,000, rupees 5,000 and pay a dividend of rupees 2,000. Rupees 2,000. Rupees 2,000. Calculate dividend payout ratio. Calculate dividend payout ratio. Calculate dividend payout ratio. Okay, so dividend, just a second. Okay, so dividend payout ratio is equal to DPS, that is dividend per equity share divided by EPS. DPS divided by EPS, or there is another equation is equal to total dividend paid to equity shareholders divided by total net profit or income belonging to equity shareholders into 100. Okay, into 100. So here when we look into the question, we understand that it is not dividend per share or it is not earnings per share which is given in the question. They have told us that we have a net income of 5,000 and we pay a dividend of rupees 2,000. The whole amount is given. Per share amount is not given. So what we have to do? We have to consider the second equation, that is total dividend paid to equity shareholders divided by total net profit or net income belonging to equity shareholders into 100. So it is 2000 by 5000 into 100. So what is the ratio or what is the percentage? What is the percentage?
40%.
40%. Okay, so this 40% depicts that the equity shareholders had an amount of 5,000 rupees with them in the form of earnings or in the form of net profit or net income. Okay, for that particular net income, they were paid 40% of their net income as dividend. So that is the meaning of this particular ratio. So it means that the earnings belonging to equity shareholders are rupees 5,000 and from that 5,000, 40% of 5,000 is given to the shareholders in the form of dividend, or it is in the form of dividend payout. Okay. So is that clear? That was simple question. Is that clear to you?
Yes, ma'am.
Yes, ma'am.
So dividend payout ratio is that simple. Okay, let us look for one more question. If somebody has your mic on. Okay, another question. Alpha PLC has earned gross income of, it's rupees, okay. Rupees 40 lakh in the year 2015. Tax and interest paid for the period are rupees 10 lakh and who has the mic on, please mute and 5 lakh. Dividend paid during the year is rupees 12 lakh. Calculate dividend payout ratio. Okay, dividend payout ratio. So we know that gross, who is still Ashley and Thomas, your mic is okay. So we know that gross income is given 40 lakh, tax is given 10 lakh, then interest paid is given 5 lakh, dividend paid is 12 lakh. Now we have to calculate dividend payout ratio. Okay, so we will go with this formula because per share information is not given. So we'll go with this formula. Dividend payout ratio is equal to total dividend paid to equity shareholders divided by total net profit belonging to equity shareholders into 100. Okay. But we do not have total net profit belonging to equity shareholders. Just a second. Okay, so total net profit belonging to equity shareholders. So we are given the gross income. We are given the gross income. Gross income is 40 lakh. We have to deduct. This is net profit before interest and tax. Okay, 40 lakh is gross income, which is known as net profit before interest and tax. So less the tax amount. 10 lakh is the tax amount. Now we have net profit after tax, but before interest. Then we have to again deduct interest amount. Okay, and now we have reached the net profit belonging to equity shareholders. 40 minus 10 is 30, 30 minus 5 is 25 lakh. 25 lakh is the total net profit belonging to equity shareholders. Okay. So now, what is dividend payout ratio? Total dividend paid is 12 lakh divided by 25 lakh into 100. Okay, 12 by 25 into 100. What is the percentage? What is the dividend payout ratio?
48%.
Yes, it is 48%. Okay. So, is that clear?
Yes, ma'am.
So, I think you will be able, now you are able to attend questions from this dividend payout ratio also. So, dividend payout ratio, capital turnover ratio is done. Okay. So, questions regarding dividend yield ratio and return on total assets. Okay, dividend yield ratio and return on total assets. That is not so common, but I'll find out questions related to that and I'll share it with you. Okay, so is that okay? So with that, we come to an end of overall profitability ratios. So is it clear?
Yes, ma'am.
Clear to everybody? Please respond.
Ma'am.
Yes, ma'am. Yes, ma'am.
What about others? Boys? Some boys only responded. Hello, please. So you're able to solve now, right?
Yes, ma'am.
Okay, fine. So